Hello, ladies and gentlemen. My name is Dr. Greg McLeod, and welcome to another edition of Bulls versus Bears, the weekly forecast. And it's so good to be with you here on this weekend. And we're going to be looking at the upcoming economic news that can really make the markets move. And we're going to get started in just a couple of minutes. I just want to go ahead and share my screen with you, and you'll get my insights on the market. So let's go ahead and share our screen. There we go. I'm going to share some sound too while we're at it. Okay. So again, welcome to Bulls versus Bears weekly Forex forecast. This is our special U.S. non-farm payroll edition. Non-farm payroll is one of the most widely watched financial economic announcements that are being released, usually the first Friday of each month. And so we're coming to the end of February, second month of 2023, and it's going out with a bang with the U.S. dollar take as large and in charge. We're going to see if the U.S. dollar maintains its dominance or do the other currencies come up for air. We saw a 1.32% move in the dollar yen, and with increased hot economic numbers, we see the Fed taking a stance of maybe raising rates even maybe faster and with larger increases due to the very hot number that we had recently. And also the FOMC minutes tells us that too. So it's no mystery why the US dollar is large and in charge. Okay, make sure that we are got a recording going. And let's go ahead and jump right into the charts. Again, we're going to go right into my favorite tool of trading, the My Market Heat Map. It's an arrangement of currency pairs by percentage change. It's a financial scanner. It tells you what's hot, what's popping, what's dropping, and what's not in the currency market. And so you can get access to it. It's 6 powerful heat maps, including the Forex majors, which you can access for free just by going to My Market Heat Map during the week when the market is actually active. You can come to this homepage, mymarketheatmap.com, and get access to this heat map for free. Okay, and you can watch some videos, but it's a market heat map for crypto, for Forex, for global stocks, as well as commodities. It's also a trader's toolbox that has economic calendar, sentiment index, and much, much more. And there's also education. There's a non-video course in the Forex Foundations to help you get started. Okay, you get a sampling of that course. We're having a special on the Forex mentorship. We're having a special on that. It's our Forex Power Course mentorship for those people who are getting started in Forex and they need a refresher and they need 6 weeks of coaching with me. We have a very good special on that, but we also have our prop trading mentorship as well. That's it's a little bit more expensive. I tell you what, we have a way for you to actually get access to a 6-figure account with 0 in the bank. And not only that, if you have a 640 credit score, you can get that training, that expensive training that you will need to get access to that account. You'll be able to get that for no down payment as well. So I'll tell you more about that offer at the end of our telecast. Okay, so let's get right to it. Let's go to the trader tools. Again, lots of tools, quotes, charts, economic calendar, Forex TV, market hours, national holidays calendar, sentiment, all the things that you need to know about Forex in one convenient location. You don't have to go anywhere else. It's a one-stop shop, right? So we go to economic calendar and see what's going on. And I already have it preloaded. And we're going to go to high impact news items. And this is what drives the market. This is the key, guys. A lot of people, they are looking at other things and, looking at little flashy indicators, but we're going to just look at the flags. This is like fun with flags. If you're a Big Bang Theory fan with Sheldon and his girlfriend, they have this show called Fun with Flags. And we're going to have some finances with flags, right? First thing we have Monday, February 27, 2023 coming up is the U.S. durable goods orders. minus transportation. That's going to come out at 8:30 a.m. Eastern time. Now, during the week, the 8:30 news cycle in the U.S., that's where we usually have the time that we have news. We have those news releases, and those news releases, sometimes the market will pause. Like if you saw Trading Places where they're waiting for the crop report and all the markets settle down until the news release. Well, that happens at 8:30 every day, and especially it's going to be pronounced at 8:30 a.m. Eastern time on Friday, March 3rd, 2023. We're going to have the granddaddy of them all, the biggest announcement that traders around the world are watching, and that's the U.S. non-farm payrolls. And that's the U.S. employment report. Tells us how many jobs were created in the economy for the month of February. It's always backward looking. And so now we saw last time we had a blockbuster number, 517,000 jobs were created last month, the previous month, and in the month of January. And we saw that the markets sold off. We saw the U.S. stock markets, the equity markets selling off because Jerome Powell and the Fed saw that as inflationary, saw more job growth as bad for the economy, and decided to we're going to raise rates and be more aggressive about it. So we have another strong non-farm payrolls number that's going to force the Fed's hand to raise interest rates and also drive the U.S. dollar higher. Okay, so let's go ahead and look deeper. Look at these numbers. But before we get to the Friday, which is what we're going to talk about later, we're going to talk about Monday, durable goods orders, ex transportation, and durable goods orders. That is going to be coming out. And we have some numbers to actually look at for that. We're looking at like maybe possibly the previous number was 5.6%. We could probably see the forecast at a negative 3.7%. A drop in durable goods orders would mean that the action that the Fed has been taking is working, actually is slowing down the economy, right? But if it does come up hot or come up higher than expected, then those durable goods orders could cause the Fed to panic, and the market would probably sell off. But that's Monday, so we might see a negative number. Now I'll talk about what currency pairs that we want to look at when trading this. Okay. Now Tuesday, February 28th, we're gonna have gross domestic product. MOM is not mom, but it's month on month. Gross domestic product is GDP for Canada. And you got the maple leaf flag that's telling us that the Canadian dollar will be in play. Canadian dollar is one that we would look at, just like we would look at the US dollar versus Canadian dollar, US dollar, the euro versus US dollar, dollar yen, dollar Swiss. We would look at those as currencies to look at for Monday. Okay, so but we're not going to be looking at Aussie Kiwi or Aussie CAD or New Zealand Swiss or South African Rand versus the Turkish Lira. Because trade selection is very important. Okay, we want to be with the cool kids at the cool party, right? The party is going to be in the American USD flag for that Monday. So those are the pairs that we want to look at trading. Maybe not trading during the announcement, especially if you don't have the mentorship methods that we have for forecasting price. Getting in the predictive function, which allows us to get in the market 4, 5, 6 bars ahead of the crowd. If you don't have that, you really should wait an hour until after the news is released. So the market takes its true direction, and then you can possibly enter the market with a little less risk. Usually wherever direction the market goes during the news, there's usually some type of a news reversal. And trading the news reversal is something that we teach you how to do. So Tuesday, February 28th, gross domestic product out of Canada, month on month, the Canadian dollar and the Canadian pair, all the Canadian dollar pairs will be in play, CAD yen, CAD Swiss, dollar CAD. And so you want to look at the Canadian dollar complex at 8:30 a.m. Eastern time during that North American session. Now, later on in the day at 7:30 p.m., 19:30 Eastern time, we're going to have gross domestic product, same number, but it's quarter on quarter. Okay, so they compared this, the previous quarter to the quarter before. And this is going to be for Australia, and they're the Australian flag. Okay, that tells us that later on in the evening, okay, we're going to be looking at the Australian dollar. That's where the party is going to be, whether it's Aussie CAD, Aussie Swiss, Aussie dollar. You want to look at the Australian dollar. Okay, so if you're trying to trade, you know, I don't know, pound Swiss, and oh wow, I'm trading pound Swiss, I wonder why it's not moving. Because the flag doesn't match. Okay, real simple stuff. Okay, this is where the party is. This is where the action is, and a lot of people run away from it. But if you run away from it, you'll be in something that's not moving. And if it's not moving, it's not grooving. You're not making any money, right? So I'm not saying trade the announcement, because it can be very volatile. But an hour before, even going into Monday, leading into Tuesday, the big hedge funds and large institutions are not getting in and out of this at this moment. They're building positions in that Monday, and they're probably building positions on Thursday and Friday leading up to this point. Okay, so you could actually start looking at Aussie CAD even on Monday, looking at the charts and looking for supports and resistances, areas, significant areas of support and resistance on higher time frame charts, because this is in play. Blue horseshoe likes Anacott steel, and so we're seeing these positioning ahead of the announcement. Okay, on Wednesday, March 1st, then we're going into the new month already. Then we're looking at the Union Jack, which is the flag of the United Kingdom. GBP is a currency. Manufacturing, PMI stands for Purchasing Managers Index, and that's a high impact item on March 1st at 4:30 a.m. Eastern time. So get up a little bit earlier, okay, to trade this announcement. And we'll probably, prices will in the, whether it's pound dollar, pound Swiss, euro pound, and you'll see the market actually start moving into that, taking positions ahead of this and after. And this is where the action will be. So but you want to put the pound dollar on your list. So, and like again, trade selection is very important. If the flag is the Union Jack, why are you trading the Kiwi dollar? Well, because it's diversified. It's like, but it's not going to move because no one's looking at it, right? It's just look at the flag. That's where the action is. Yes, there's $6.1 trillion in the Forex market, but it's not going to be equally distributed among every currency, right? Some will benefit more from this news item. Think of news as a big rock. The water is the market. When the rock hits the water, it creates a ripple. The currencies are like little boats, and they are moving up and down in the result of that ripple. And that's what the currency, the flow, that flow, that movement gives us the ability to make money in this market. $6.1 trillion is a lot. And if it's being focused on one or two currencies at any particular time, the other currencies are probably going to be, running like boats running aground. They're not going to be moving. Okay, moving right along to March 2nd, 2023. We're going to look at, this is the ECB flag of the European, not the ECB, but the European Union flag. The ECB monetary policy meeting and accounts says they're going to be meeting, and that's going to be at 7:30 a.m. Eastern time. And we'll see the euro. So we'll look at the euro versus the US dollar, and that's affectionately known as fiber, right? The pound is called cable, and the euro is more modern, so they call it fiber, like fiber optics. Not that you need more fiber in your diet or anything like that, but that this is the currency that we want to be watching. It has been downtrending quite a bit, so any rally in this currency may be something worth shorting, but we'll take a look at the charts to confirm. And then we go down to March 3rd, 2023. That leads us to our big finale for the week. The set of economic data revolving around the jobs report. And we're looking at our average hourly earnings month on month at 8:30, average hourly earnings year on year, and non-farm payrolls. Average the earnings, if they are high, if they are very strong, that's going to mean that that there's inflationary pressures, and that that the Fed will be even more hawkish about raising interest rates. So that's very important to watch that. So non-farm payroll comes out, and that is going to be pretty important to watch. And I am looking here, Friday, March 3rd, non-farm payrolls at 8:30. And interesting. Okay. Yeah, so that'll be the first week of the month usually, and I'm just double checking because I am actually checking another website to make sure that it is there. Okay, so non-farm payroll. Okay, so anyway, let's move ahead. Let's go ahead and go on to our charts. I'm going to go to Trading View. We're going to start with the U.S. dollar index. U.S. dollar index is a basket of currencies versus the U.S. dollar. The DXY is the symbol. A lot of people don't trade that, but remember I told you guys last week that I stuttered the monthly chart. This is the monthly chart of the dollar index, and we were bouncing off a 38% retracement. And boy, look at that big bullish candle, and it's engulfing the action of the previous candle, and it's very strong coming off of this support area. This is actually a 50% retracement of this move from the low on January 1st, 2021. We hit a low of 88.56, and we hit a high of 114.69 on September 1st, 2022. And we've been correcting back down. We moved down to a 50% move, and now we're bouncing and have a very strong move higher on the monthly chart. So let's go ahead and move to a weekly. We're walking down, and we can see that week after week, after a couple of weeks of consolidation, we had a breakout, a three-day breakout above some previous highs, and now we're stacking candles, knocking out stops as the bears are getting stopped out. We have an old high of around 105.63, and we're at 105.26, and we're still moving along this trend line higher. Big gap candle down at 110.71. We could see 110.71 and the old high. I expect the old high of 114 to be challenged over time, not right away. But you basically have a central bank that's committed to raising rates, fighting inflation. We're having strong economic data. So the stronger the data, the higher the interest rates, the higher the dollar is going up. So it's pretty simple stuff. And if you understand where the US dollar is going, then you understand where the other 7 major pairs are going. Dollar Swiss, dollar yen is up, dollar Swiss is up, dollar CAD is up, Aussie dollar is down, pound dollar is down. So let's just see, okay? But this is a kind of a shortcut cheat sheet that I teach my students when they are looking at the market. Check this currency first, the dollar index, and you understand how the majors are going to go. Okay, so let's walk it down to a daily chart, and you can see that we are just making new highs, and we are just getting started. We broke a downward trend line back in middle February, about February 10th, February 3rd, we broke, and we're moving, just walking up this trend line. Probably have some type of maybe a trend channel of some sort. I'm going to clone this like a sheep. And there we go. So we have our rising trend channel. We're at the bottom of the channel, and we'll probably oscillate our way up and down, just like we oscillate our way down. We have higher highs and higher lows, and we have maybe some old resistance at 105.65. And so again, bulls versus bears. I am bullish. The dollar index, go USA. And Jerome Powell is fighting inflation with higher interest rates. Okay. moving right along, let's go ahead and go look at the anti-dollar EURUSD. Again, we do have that European data coming out as well. And we can see that if we walking back from our monthly chart, and we can see that we have been downward trending for a while from the highs that we had back in 2007 at the 160 area, and it's been lower swing lows and lower swing highs all the way down. And now we've made a new low. We rallied up. We have lower high. Get your structure, people. We broke a key level of support. And we broke above the support area where it can, if it can stay above 105.45, it can be constructively bullish. But we have an engulfing candle here at the whole number, round number, the 110, the 110.00 area. And now we are working our way down. So we might find some support, bounce around a little bit, and then break on down to the other side. I'm looking at 95.45 going in the opposite direction of the US dollar. But we do have a major, a bit of support. We could bounce, or we could break right through and break on through to the other side, right? But lower swing highs, lower swing lows, we are in a downtrend. We probably have to retest this low, and we can break that low, and then we have another set of lows down here at 83.61. Takes us to the lows of the century, back down in back when we haven't seen those lows since 2002 for the euro, for the single unit. And we're filling that in nicely. We've been on a downward spiral and have not made it back. Okay, let's walk it down to a 4-hour, or actually to a weekly chart. We're just going to walk it down, right? And we can see that we didn't even get to the 200 self-moving average. Rejection happened in this round number, big round number daily chart, right? Again, it seems like we're slowing down. We still have, there is this support area coming in to play in this 104. And we can even go down to our 4-hour chart, dealer charts. And you can see that as we're making these lows, we're just trucking along, right? So you want to use an oscillator, some type of an oscillator, and look for any type of rally. After extending for so long, we may have a short-term bounce. We do have 4-hour support back here at 104.83, which could give us a little bit of a reprieve. Still a long way down to go. So I'm bearish short term, long term, medium term. Euro to zero, no, not quite, but it looks pretty bearish in the face of the US dollar. Okay, so I'm going to set this back up to our monthly chart. Our monthly chart is like having this. Well, Greg, we don't trade off the monthly chart, but it gives you context and gives you that 50-foot overview of what's going on in the market, right? And just think, if you were to short from that 122 area back in January of last year, you'll be up 600, 700 pips, right? Or more than that. Okay, so let's go ahead and look at we're going to have some news, some PMI of England. Take a quick gander there, and we can see we had support and resistance ping-ponging around, and then we broke through, right? And a new low down in the 103.02 area, and we had a nice bounce there back into this old area of support. But I call this return to the scene of the crime. Price rallied into resistance. Old support became new resistance. This was a support zone for a long time. Now it's a resistance zone. So price broke out and then returned back, and we got some rejection candles here. So bulls versus bears. I'm looking for this for the UK, for the British pound to drop. And we can go to a daily chart. We can see that it tried very hard to get out. It broke, and then it didn't get out there, right? And broke some trend lines. It rallied along this trend line, broke it, moved sideways, and so usually have a rally base drop. And so a break below 118.32. Could see a complete cascade down to the 103 area for a retest of the lows we saw back on September 26, 2022. So bearish. I am bearish the pound versus US dollar, and I've got my bear here. So we're bearish. We're bearish the British pound, right? Okay, we have some Aussie news coming out as well. AUDUSD. Take a quick look at that. And you can see that we're just dropped completely off on this monthly chart. And again, we had we had some type of a rally from this wick. Buyers stepped in. We had a pullback, a rally, and was rejection. We were rejected in the 71.50 area, and now we have an engulfing candle. And now we're looking for prices to continue to drop with this US dollar firmly in the driver's seat. As long as we can have continued inflation data, strong economic data, causing the Fed to raise rates. Basically what they're doing, they're raising rates. They're reducing the amount of liquidity or the number of dollars in circulation. So they're basically turning off the printing presses or turning them down. They're not printing as much. They're still printing billions of trillions of dollars. But the reduction in dollars, remember supply and demand, the less you have of something, the more it's worth, right? So if you have fewer dollars in circulation, then the value of the dollar goes up. And that, impacts the other currencies as well. So we may see, so the 50,000 foot view, we went from a high of 71.63, and currently we're at 67.21. That's almost a 400 pip drop in that candle. And there's a lot more to go here. So bulls versus bears. Hey, bring out the bear again. Okay. It's bearish. It's looking bearish, right? But he said, well, Greg, but you gotta use timing. You can't just short and really nilly. You want to short rallies. In a downtrend, you want to short when it goes high. You want to sell high. Not saying that to partake of any drugs. You want to sell high and buy low. Look at a weekly chart. See, we had a down move and a rally and we had a double top rally in a downtrend, and now we're coming down, right? And so anytime we have rallies up against this trend, we want to trace the market. We don't want to chase the market. We might see some type of rally. If we get a small rally on a 4-hour or daily chart, it may be a time for us to take it to the short side. Again, there's no recommendations given. I'm just telling you my opinion. This is for entertainment and education only. But if you can see it, we're making lower highs, lower lows, but we are coming against some support. And usually even, we might get a little bit of a rally. It's a little 3-wave correction rally. And, because you can actually, you see this downtrend, oh, it's a downtrend, you sell, and you could lose money selling. And I don't know how many of you guys have had that happen, but you can actually, wow, this is down, I'm going to sell it. And then it rallies, right? Just like it did here. It rallies, and then you get stopped out. Oh, then you buy, right? And then you buy, and then it goes down, and that sucks, right? And then you sell it again. Oh, wow, it's going down. I'm selling it. Oh, wow, it seems like they know but this is what it does. The market goes down, then it goes up, and you have to buy without seeing and sell without seeing as well. If you see it rallying, it's counterintuitive. You've got to sell when this thing is going up. And you have to have pretty good timing too, because if you sell too early, you could lose money on the, on that too. And that's why education is so important. So you'll learn, if you use Fibonacci or some other method or oscillators to actually time these peaks. Because if you get short it here, buy it back, short it here, buy it back, like I do on a daily basis and my students do, then you're no longer in this cycle of losing your account. Okay. Anyway, let's go ahead and move on to our next. We have some Canadian news coming out. So what we can do, the Canadian news, we can look at the dollar CAD. Since the dollar is pretty strong, we can actually take a look at that, and we can take a look, and you can see. Look at that. We're going to go out to, we want to start with the higher time frame, start with a month and work our way down. Not that we're placing any charts, or maybe I'll be another. Let's try that. Okay. We got a little bit more data there. We can see that we've been moving sideways for a while. We dropped to some level of support, and then we've been bouncing off the support, right? So we can take some support areas, nice bit of support, price dropped. And this is not exactly, I actually, it's there, but you can see price came down pretty close here. And now we've been in a giant range, and we launched off this low really nicely at the 120 area. And now we're making higher highs and higher lows. So we have an uptrend. So this is our uptrend. Uptrend has not broken. In fact, it is accelerated and made a more steeper trend angle. So now we just follow this up. We're probably the 146 area, and we might even break above 46. Again, this is a monthly chart. Drop it down to a daily, and you can see, yeah, you could have gotten short, got long and short and a little bit. Remember, the overall move is north. We're heading higher. So any dips, buy the dips. This is a great double bottom here at 32.53, and plenty of room to get back to 39.60 on the daily chart. Let's drop it down to a 4-hour chart. 4-hour charts are known as dealer charts. When we might get, and we've seen this kind of shooting star pattern, 3-candle bearish pattern. We have a bullish candle, a long wick candle, another small bearish candle. So we could get a little bit of a pullback, but every time we've got a pullback in an uptrend, that we buy the dips, right? If you were looking for a pair of Jordans and it was going for, normally what, $400 or $500, and you can get it for like 75, right? That's a dip. That's a pullback. So we want to see, we buy dips and things. We buy cars and we buy other things, and we're looking to buy it on sale. We're looking to buy this on sale. FOMO is, oh, this is going up, I want to buy it. It has a big green candle, and you buy it. Your name is tattooed on that wick, and it drops against you. And that sucks, right? So you want to buy the dip in an uptrend. And we have a trend channel here. Try to say trend channel 5 times fast. I dare you. I double dare you. And see, we got the top of the, you can use somewhere. We're rallying. So the top, so the areas of buying are very simple, right? It's simple. Hindsight's 2020, right? The old Monday morning quarterback, but these are buy areas, right? So are we in a buy area? No, but it's an uptrend. It's like, yeah, but we're not here yet. And when we do, that's where I'm looking at getting in, right? So again, not a recommendation of any kind, but it's just what I'm looking to do. And when you have education, when you're trained by a professional, you know what to do, right? Okay, so Canadian dollar looks like we might even get some stronger CAD news and give us that pullback, right? But non-farm payroll may take this sucker to the moon, right? Moon is a technical term. Okay, so we've got that. Let's go back to our economic calendar. We have the euro coming up on Friday. See what any other currency we got the Canadian dollar, we got the British pound, the Australian dollar, and we took a look at the euro. And want to take a look, trading the euro during the during the session, during the non-farm payroll, is actually a pretty good deal, right? Because the euro is the anti-dollar. So we look at the euro as the anti-dollar, right? I mean, we've been barreling straight down. There's support down here at 104.83, you know, and we just been dropping. We have a bit of support there, busted right through that. And basically we're filling in all this bullishness, and we're forming a bottom of 104.82. I like to stay short on that until we reach something like that. And then we can see some type of a bounce, right? So it might be pretty interesting. Again, bulls versus bears, I'm bearish the euro. But let's look at the indices. Let's look at the S&P 500. Some people are trading stock indices. With my method, even though Greg's knows the Forex guy, but you know, it's all Forex, because anytime we exchange US dollars for stocks or indices or commodities or copper or it's Forex. You are all part of the $6.1 trillion a day market, whether you like it or not. Whether you close your eyes and put your head in the sand, you are trading Forex. You're going to trade your USD versus Tesla, and that's what you're doing, right? So here's a monthly chart here. And this is very interesting because we had this surge, and we have this ever since Jerome Powell's been hiking interest rates. We've been bouncing around, but we're forming a lot of support in this area. This area is very important because it reflects the Fibonacci relationship. If we go from the low that we saw on March 2nd, 2020 to the high that we saw, you know, in September or actually January, we had a pullback. We pulled back to a 50% and tagged it exactly. And we've been consolidating, building a base in this 38% to 50% retracement, right? And we also have a rising trend line, which is now based on seasonalities. We actually have a seasonality where in March, the U.S. stock market actually makes some type of a rally. So there might be some type of decoupling from risk assets here, because we've got a higher low, and so we might see something in the form of some type of a bullish type of move, right? A bull move. And I want to show you this. This is well, it was a 63-year seasonal pattern. It's actually a 73-year, but traditionally, in the Dow Jones Industrial Average since 1950 has averaged on 0.4%. I don't have updated numbers, but I just use this chart. I mean, it only went to 2012, but did we have a pretty skanky February for the stock market? Yeah, right. But look what's March and April. Traditionally, we get rallies in the U.S. stock markets, especially the Dow Jones Industrial Average, in March and April, right? Because we have a pullback in February, a rally March and April, then our sell-off, sell in May and go away. We get a pop rally in July usually, and August. Now, if trading currencies, you know, we might see something of maybe some type of a pullback in the U.S. dollar, a little bit of profit taking and all that bullishness going into March after non-farm payroll. And we might actually see a rally in the U.S. stock market and a rally in risk assets going into May, okay? So we might see this rally, but this is a monthly chart. These are graphs way far away. Let's drop it down to weekly chart, right? Weekly chart does not look like, but we look like we're having a shoulder, like an inverted head and shoulder pattern. We might come back to the trend line. It may be bearish for a bit, but the low of the shoulder is at 36.42. We're at 39.70. So we could see a bit of a drop to retest this trend line, and the 200 simple moving average is down there as well. So we could see, you know, bulls versus bears. I'm bearish, but, you know, I'm cautiously bullish. If we can get down to this trend line, probably by March 5th or 6th, then we could see a rally from here, right? And so, so that's what we're looking at. We're short to medium term bearish, and then longer term bullish and for the S&P 500. So there might be some more pain for the bulls, especially if they're trying to buy any type of dip here. We can go down to a daily chart, march it down, and you can see, the topping pattern. And basically we're in a range. We're in a big range, lows and highs. This is bouncing around like Pong. And really we want to see a breakout above 43.21 to resume the bullish trend. But if we get below 34.96, then good night. We're probably going to see some new lows. But they look like they're holding it. They're maintaining it. They're trying to keep it from breaking structure and going more bearish, right? And looking at a 4-hour chart. And if we're in a range like this, you must buy support. So we had resistance. So boom, this is a resistance. Support down here. We test these lows at 37.98, bounces again. So you just milk this kind of like some type of buying support, selling resistance. It's kind of like the old rolling stock kind of thing. Let's look at the NASDAQ 100. We can take a quick sneak peek over there. I'm going to use the CFD. And you can see that NASDAQ is, the tech-heavy NASDAQ is forming a little bit of support in the 4-hour, but I'm going to start back with the monthly. Start with the monthly and work our way down. You can see how this was very bullish. This was a full-body green candle, and then boom, smack down, turned a small red one. This is a long wick, like they used to call it a Pinocchio bar. Pinocchio is that character in Disney stories where he was the boy that was made out of wood. When he told a lie, his nose would grow. So you can imagine this as a Pinocchio. He's, yeah, I'm bullish, this is going higher, and you really should buy me because I'm bullish. Yeah, I'm going up, and you're gonna make a lot of money if you just stay along. And boom, oh, I'm sorry, I lied. Sorry about that. Right, smack down, and it changed color to red, right? And usually we get a candle on the other side. I'm sorry you lost all your money. You really should trade with stops, but all right. So there you go. So we break the low of that candle at 11,879.22. We can see some stacking candles back down to support, right? Again, this is a monthly chart, but a monthly rejection is usually pretty bearish. So let's go ahead and move on down to a weekly chart. And we can see that we are in a downtrend, lower swing highs and lower swing lows, right? And we have, if we draw that as a trend line, we've rejected it. We do have some type of maybe a slightly rising triangle there, but there's support down here at 108. The 200 simple moving average is sitting there too at 1153.32. Let's walk it down to a daily. And you can see a double top bearish move at the 12,733 area roughly. And we're bouncing off the 200 on that daily. And we continue to move down to support down at 11,232. So this is playing out nicely for if you're a bear, you're buying and get your honey, you can afford a new cave, they're high pawing each other. But watch this, because we may get a little bit of bullishness on Monday. If we get some bullishness on Monday, then turn around Tuesday, we could see a continued move lower. Why? Because we're on the other side of this trend. We're on the other side of this trend line. And then we based for a little bit, and now we're on this side of the trend line. We're on this side, right? And you can see the structure. Higher highs, higher lows, higher highs, higher lows, higher high, lower low. Well, we have a low, we have a lower high, and then a lower low. So this is your change of this trend channel. We are rally up to try to resume the trend. It failed, and we made a lower low. So this now tells us that our trend has changed. We're on the other side of the trend line. And so now we expect bearish moves down, right? So bulls versus bears, NASDAQ 100. Okay. All right. Now, let's look at Bitcoin, BTC USD. And we can see and then walk it up to, I'm gonna move all drawings, go out to let's go out to our monthly chart, right? 1 month, and stretch it down, and we can see this was big bullish candle, yay, and then indecision. Doji is a candle. It's not bearish or bullish, it's neutral, it's the cross. Decision has to be made. Is it going to go to heaven or is it going to go to hell? That the cross is making that decision. Just like you folks, you make your decision. Who will you serve? Okay. Let's go to our daily chart. And I was walking, weekly. Let's go to weekly. We're going to walk down too far. And you can see that this indecision, we had a rally, we had a pullback, we had a rally, and now we have this this weekly chart, and then an inside week candle is pretty bearish, because this is a harami. Harami is a pregnant pattern. It's like the mommy with a baby on the belly, but that baby is a baby bear, right? Oh, did you say baby bear? I like baby bears. Like, yeah, because you are one. Anyway, so let's walk it down to a daily chart, and you can see higher highs in price. We have a low. The trend is trying to continue because uptrends always higher highs and higher lows. What will tell other traders to bail on this trend is we break the low. We'll break a structure. We break a low. We have a lower low, and then it rallies to a lower high. Right now we've got issues, right? But right now, they're going to maybe try to rally this baby up. So bulls versus bears. I'm short-term bullish. However, we break the trend line, we're bearish, right? And we go down to walking down to a 4-hour chart. And you can see it's struggling with the 200. It's sandwiched, pinned down between the 200 and the rising trend line. So it's forming like a little triangle there, and the decision could break south, right? So we're at 23.096. You want to watch this level of support. It might give away, and we can see price cascade down, 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 low, low, low. Okay. All right. So that's Bitcoin. Gold. Still, somebody wanted to hear something about gold. I got a lot of my traders have really developed a really powerful system for trading gold. And the gold really takes off, really. XAU, USD, that's what we need to use. UU, okay. So like 8 cap. Now, as the dollar rises, remember, it's XAU or gold versus dollars. You exchange your dollars to buy gold, right? But what's going on here? People aren't exchanging their dollars and buying gold. They're exchanging their gold and buying dollars. That's what this, when the price is going in this direction, we're trending in the direction of the USD, right? And to the base currency. So we have this lower swing highs and lower swing lows because people are exchanging gold for dollars. So look at the monthly chart, and we can see, after resistance, a double top, clean double top, not even able to break above that 2075 area. And then we rallied up from a low, we made a lower low. And now we made a lower high. So now we're now on the other side of trend. And so if the downtrend continues, we will see a lower low, or is most likely we will see a lower low at 16. The market can do anything it really wants to do. We're just giving my best guess based on what I've learned over the past 30 years. And I get it wrong sometimes, right? So there. See, this is really cool. It's a very classic pattern. Prices rally, higher highs and higher lows. Failed Let's get a guy walking up the stairs. Oh, his foot went through the stairs, and oh, now he's underneath the staircase. Then he tries to get up. He wakes himself up. You know, he gets knocked unconscious when his head hits the back of the stairs, and then he falls back down again. That's what this. I hope that picture. You can see how we rallied. We broke. We rallied. We couldn't get on the other side of the line, and now we're heading back down. And so we might be heading down to that 16, 18 area. Okay, so bulls versus bears, bearish gold, right? And because gold is priced in, you know, people are exchanging their dollars for gold, or their gold for dollars, right? So, and you probably see the same thing with oil. I know there's people that trade silver as well, but XAG is basically gold's cousin, and it's even more bearish, right? Higher, same high roughly, then lower swing lows and lower swing highs, a lower swing low and a lower swing high. So the old high tells us that we're may go to the old low, right? $17.49, and you know, $30 and down to 17. It's like pretty massive move. That's on a monthly chart. The daily chart, we see it just rolling over, breaking trend lines all the way home, right? And it's just bearish. There's plenty of money to be made being short silver. Okay, go down to a 4-hour chart. Same thing. Lower swing lows, lower swing highs. We're in a downtrend. This thing is power diving down, breaking this trend line, and lots of room. Another $3 move could see us silver back down to the lows we saw back in September. Okay. Oil. Let's look at the U.S. oil, which is West Texas Intermediate, WTI. Cushing, Oklahoma is where a lot of oil comes from, not too far from me, about an hour's drive up, and that's why oil is cheap here in Texas. God bless the state of Texas, right? There we go. There's a yellow rose in Texas. There we go. So it's interesting where, we've been in a range. We rallied up to this 128 area from lows of being negative almost, right? We rallied up, pulled back, but we probably pulled back to a level Fibonacci support, right? It's like, even though oil is priced in dollars and the dollar has been stronger, demand is still high, because if you have more people with jobs, more people driving, more people buying things, transportation stocks and things like that are up. Rail, anything that we eat or wear is transported on something that uses gas, unless it's delivered by an Amazon electric truck. So this area of support, 76.42, may be after, and we've been there 1, 2, 3, 4, 5, 6 months. We can see a sharp breakout above 81.85 to the north side. Bulls versus bears. I'm constructively bullish on oil. Okay, I know it's going contrary to the interest rates, but it's we do have we are having some greater demand, stronger economy, and usually that. When we have stronger demand, stronger economy, the old supply and demand thing, the more people want it, the higher the price goes up. So we can let's look at a weekly chart, and you can see that we're hanging out there sideways. As long as we stay above $68, we probably see, we could probably see $100 in oil. On a daily chart, you can see that we're holding support at 71 area, and then we go to a 4-hour chart or dealer charts, and you can see that they're just amassing sideways consolidation and accumulation. When they buy up all the supply that they want, then they'll spike it up, and then So a break, you'll notice that when we get a break above 82.24, and that will tell us that this period of cheap gas we had may be over. So fill up. I'm not talking to Philip, but fill up. Okay. All right, guys, that's going to be it for me. I want to thank you so much for joining me for Bulls versus Bears Weekly Forex Forecast. Make sure you like, subscribe, and share this video. If you want help from me, you can also check out our 4 Pillars of 6 Figures video, the masterclass found at elitetradersuniversity.com, the #1 fastest growing Forex and day trading education program out there. Is the home of the, get a 6-figure bank account, the 6-figure trading account with 0 in your bank account. Contact us today. Come over to elitetradersuniversity.com. There's a free income boost ebook. There's a free masterclass. You can sign up for the free masterclass. You can watch the 4 pillars to on-demand trading of profits. Go ahead and watch that. And then if you want to learn more about what we do and how we do it and see if we can help you or not, and whether you want me to coach you professionally and to help you become a professional trader in 90 days or less, then go ahead and book a call with our team. We are available to talk to you, help you get clarity. Our program is not cheap, and we are picky about who we let in. You have to apply. You have to fill out an application. You have to meet our requirements. If you are coachable, if you are someone that is willing to put in the work, who loves the markets and who wants to make a difference, who wants to be an impact player, and you want to help other people out, then you are the kind of student that we're looking for, that's coachable and who is looking for results. So make sure you go to 4 Pillars of 6 Figures, and you can claim your spot to register and see if this opportunity is right for you. In addition, we're also doing a special Las Vegas Forex Mastermind where we are going to be doing a live mastermind trading event. There are only a few seats left. We're nearly sold out, and I'm going to be doing 3 days of live trading, education, mind hacking. Our theme is hacking the trader's mind. You can get the schedule is here. We're going to have your Top Golf greeting on the 2nd, London VIP trading. We're going to have early bird trading session, and then we're going to have a special Brazilian steakhouse dinner and a number of great things. Sign up today. There's very few spots available, and I know that you will learn a lot. You'll take your trading to the next level. Be in the room with me and with other of our Elite Traders University graduates, as well as our current mastermind attendees. And this is your opportunity to you want to check Greg out and you want to see what he does. Well, this is your chance to do it. And in beautiful, fabulous Las Vegas, the Mansion Mastermind is going to be a tremendous event. Don't miss out. It's also going to be streaming. If you can't make it those dates in person, then the next best thing to being there is to get on a stream. Okay. So again, I look forward to seeing you. And my name is Greg McLeod. Thank you so much for being with me. And let me know in the comments if you have any questions about the economic calendar that we use, about my market heat map, or anything you would like to find out more about. You can put it in the comments section below in the YouTube channel. Okay, I appreciate you. Peace and pips. Dr. Greg McLeod signing out. Happy trading.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!